As usual, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay? Alright, so we're back on track. For those who missed last Thursday, we did a bit of a revision session. But apologies to all, I had a few family major dramas that it meant that I couldn't do my class, but we're back on track now. Now we had non-farm payroll last week. If anybody stayed up to watch the effects and how it affected the market, a couple of things or a couple of comments, should I say, regarding that may have surprised a couple of people. The major thing that we saw from that was that the jobs added came in at 173,000, and I think the forecast was 220 or 230. I don't remember how much exactly, but the number was well short of the forecast. And yet, what happened? If anybody watched, so we saw the number come in very, very short, and we saw a huge amount of strength in the US dollar, which kind of defies logic or doesn't quite make sense. Now, if you're very, very new or newer to trading, you can be it can be understandable of your reaction to such an event. Essentially, a couple of things. First of all, August in the last, they've done the statistics. The month of August is the month that is continuously being revised up the most out of all 12 months of the year. So what that means is that 173 number came out, and probably in 2-3 weeks time they're going to come back and say, oh, it actually wasn't 173 and it was a higher number. So that means revised up. So I think in the last 12 of the 19 August has been a revised up number. So meaning that number doesn't have the same weight as in other months for the particular month of August. The second number, and which was the more important number, was that the unemployment levels in the US were down to 5.1%, which is the lowest that they have been in the last, I believe, 8 years. Okay, so that was much more significant. So even though the new jobs added was lower than the forecast, the unemployment number was far more stronger and overtook the sentiment. Hence, we got US dollar strength, Aussie dollar dropped down, and most currencies lost ground against the US dollar at that announcement. So that's just a quick explanation of what actually happened. Now, this is one of the reasons it's so difficult to trade news. It sometimes becomes a bit of a guess unless you know the macroeconomics of what these numbers actually mean. You can't just simply trade it because it's not the number that we were expecting, and therefore it should go in one direction. You need to have a little bit more of an understanding of what's going on, and in the euphoria of the moment and in a quick decision-making process period, it is quite difficult to do. Okay, so that was non-farm. Now, this week now, every single thing that is dominating at the moment is basically the headlines that are dominating is, will the US implement that rate decision that they've been pretty much telling us is inevitable since March? Will they actually do it? Okay, the deadline, well, there's actually no deadline. They can do it whenever they like, but the FOMC meeting, I think, is on the 16th of September, so it's not this week, but it's the following week. So usually what happens when the entire market is waiting for such a big news event, the market tends to range. Okay, so, and if anything, we may see the US dollar lose a bit of strength throughout this week, but it will be in some type of a range. Okay, now the following week, and we'll talk a little bit about this more next week, but in the week leading to a major announcement, you can usually see a big sell-off on, and it's usually people who are collecting their profits, who don't want to put that profit at risk of that announcement. So what may happen, for example, is we may see US dollar get strength, gain a bit of strength this week, and then next week, leading into the announcement, it loses all that back because people don't want to take the risk on the announcement. Okay, so this particular week is a little bit let's call it, we're going to call it a bit of a ranging week where the markets may range a little bit. We'll have a look at the charts to see exactly what's going on. I think it's important for me to talk about this right now because it puts you into the frame of mind of what's basically taking place. In the world of currencies, this FOMC rate decision is huge. Okay, fund managers, corporations, everybody, any company who deals in currencies to hedge their risk. Pretty much the whole world is waiting to see what happens. Okay, and it may not be a massive move, but it does mean that because the anticipation is so big, the market trades in a smaller range. Okay, that's the main message that I want you to take from that. All right, from currencies and news events that we have this week, the US pretty much does not have much news events, and that's one of the reasons that it's going to be tightly bound. Okay, probably the currencies that are going to move the most this week is probably we've got the Kiwi dollar, which has their Reserve Bank announcement, and at the moment the Kiwi dollar is a little bit of a commodity driven currency, but more so they are very reliant on things like dairy. Okay, so like milk and those types of things. Oil coming off hasn't helped them in this regard, so it's going to be interesting. I believe that they will not going to move, but they may surprise. Okay, and of course the statement is quite important with the Kiwi dollar. They will give, if they give us any kind of indication as to what the monetary policy will be like moving forward. Okay, so Kiwi, we also have the GBP is going to be an interesting one. So we have their bank votes, their decision. Nobody's expecting them to move, but they also are providing the statement at the same time, where usually the statement was 2 hours delayed. This now happens at exactly the same time, which basically means we can see candles that kind of look like this. They might go all in one direction and they go all in the other way, the other direction, because the numbers move it one way and the statement can move it the other way. So just be aware of that. That's GBP Thursday. And the other major one, which is making an announcement, is the CAD. If anybody's trading anything CAD. Okay, so just be aware of those. As far as our Aussie dollar, we have China data tomorrow, which will affect us, and we have employment change figures on Thursday as well. Okay, so keep an eye out on that. I guess if I had to choose a currency that's probably going to be the most volatile due to announcements, I'm going to say it's going to be the Kiwi dollar. All right, so the Kiwi USD, so look out for that one, and that happens very early in the morning. When is it? Like 7 a.m. Thursday morning. Okay, let's bring up our charts. Let's see what we've got, and let's see how we can play our way this week. All right, so let's start off with the Aussie dollar. Now, we finally got there, guys. I know that I missed last week's class, but I have been saying for a very long time that we will touch 69, and we've done it. Did anybody cash in along the ride? The last time that I spoke with you guys, I believe would have been, I think it might have been this candle over here. Okay, so Rav is still in the trade. Okay, fantastic. So we've had some really good, a really good ride out of the Aussie dollar. I am now at a point that how low did we get? Give me 1 second. 69.08. So we nearly touched 68. 69.08 is about as low as we've been so far, and right now we're ranging. If I go to a 1 hour chart, yeah, we're ranging a little bit right now in here. So, and whether we can break or if we're going to make the bounce back. All right, this is where I stand on the Aussie dollar at the moment. Okay, and now remember, anything that I say, it's not about being right. It's just about being able to identify a trade and take a trade. Okay, so I'm quite happy to be wrong and still take a trade than to be right. Okay, I'm kind of at the moment on the Aussie dollar, we've hit 70, 69. I always felt that if we went through the 69s that we would have to go through it quite a bit because there would have been a big build up of orders just underneath 70, and we've done that. I believe we've cleared out all those orders, and now the next major movement this week is going to be determined by those job numbers on the Aussie dollar. From the US side, I don't think we're going to get anything. It's going to be quiet on the US. So this week we're probably going to be moving more based on our own data and the China data that comes out tomorrow. All right, I just get this feeling. And then I don't trade on feelings, but I'm looking out for an opportunity to justify the feeling that we could get some kind of a bounce, maybe even as high as 71. And I also get the feeling that the rate decision is not going to go for the US, and that they're not going to move rates, and it could bring us back to 75. Now that doesn't mean I'm telling you to go out and buy right now and hold. That's not what I'm saying at all. I've got to wait for these things to happen, but that's just my gut feeling. So for this week, Aussie dollar, I am doing nothing. Okay, I'm not prepared to take a trade. I have now officially closed all my short trades. I got nothing on the Aussie dollar. I got nothing short. I've hit the targets that I was looking for, and now I need to wait for my next opportunity. Okay, now from a technical point of view, this candle here is a really nice candle that we just broke new ground, and in many ways, if I go into a 4-hour chart, let me just it's not the prettiest kind of flag, but it's kind of, wanting to look like a little flag, which indicates more movement downwards. However, like I said, for this week, Aussie dollar, I have no positions, and I am not opening any until I see some kind of a significant support or a bounce back. Okay, now if this happens to be where we draw the line in the sand and we start to do a bit of this and then we go that way, then that's good enough for me to look for a trade. All right, now if I show you a monthly chart, you can see that the last time we were in this area here is in 2009, so that's 6 years ago. At the moment, there's a big pocket there, so I don't really want to go short anymore, and I don't see any support either, so I'm just going to sit on the sidelines. Is everybody clear on our strategy for the Aussie dollar? Okay, if we get good Aussie data now, and the US does not increase the interest rates, we could be back up to about 73-ish, 75-ish, anywhere in that range. Okay, all right. So let us move on. Let me go back to my daily chart. So for the Aussie dollar, I don't really have anything at the moment. We're sitting out. We've closed out all positions. Thank you, Aussie dollar. You've been very kind to us. Okay, Euro USD. Okay, we had that crazy moment last week where we just went bang. I think some currencies moved like 1,000 pips in one day. I think the Euro Aussie, and it was just a huge crazy day. It would actually moved like 600 pips in 2 minutes, and then the market moved back, which kind of made the charts look a little bit on the funny side. Okay, we had this line on our chart which I kind of like, and even though we did spike up, the euro is coming back down, and I've just drawn a couple of markers. What I kind of favor right now, I'm in transition. I do think that we may come to meet this line one more time. Okay, now there's a couple of reasons that I say that. In last week, the euro, they redid their forecast, and pretty much they said that they're not expecting a larger growth of more than 2% over the next 2 years. Okay, so they're kind of settled in, and they're pretty much announcing that they've conceded ground, and they're not expecting too much from the euro. So you kind of get the feeling that the euro is going to lose a bit of ground, and they're quite happy for that to happen. In fact, so much so that now all of a sudden for their central bank, it puts back into focus whether they increase their quantitative easing program that they've currently got running. Now, should that happen and they increase that program, basically they're weakening their currency even further. So the euro at the moment, if anything, I still prefer to be a seller. I know that I'm showing you this line here, and I have to respect this line because I've got 4 really good touches on it, and the line is angled in an upward direction. However, I feel that we're in a downward movement on the euro. The fact that we had this big spike kind of throws the charts off a little bit. So this is what I would like to do on the euro. I would like to see this week, okay, hopefully this week we get a little bit of a bounce back into somewhere around about here, and then I want to try and trade it down to this line. Okay, so in an ideal world, that means if I get to about 113, I get the setup that I want, and then I get an opportunity to trade back down to about 110. That's the trade that I would really look for. Now, don't go out and put in a pending order at these 2 numbers, because the numbers is not important. It's the setup. I would love it if I get an inside candle setup around about the 113 level, and then I'm going to try and trade it back down to about 110. All right, so if I draw it out for you, what I would really, really like is this. Might take like 4 candles to happen, but let's say it comes up here, and then I get candle with the little fractal, I get a little candle on the inside, and then I trade it back down towards there. All right, is everybody clear? In an ideal world, this would happen around about the 113 level. All right, so that's the trade that I like for the Euro USD. So look out for that one. It looks really, really good on paper, and if we do get that pullback that I'm talking about, you could find yourself that we end up with a really, really nice trade. This trade, I think, will show itself. Okay. Alternatively, if that one does not appear, I'm willing to try and bounce off this line if that shows up, and I get the inside candle down there. Okay. So I'm willing to have a go at it in this direction as well. All right. So like when I trade this way, I'm not worried, because the risk level compared to the reward is usually always 2 to 1. So it's worth the risk, even though I feel that I'm in a downward market. Like I said, in an ideal world, because we had a bit of a bounce, I think it's probably going to bounce up first before we make the way down. Okay, so either one of those 2 trades is valid, and if I do see them come up, I'll make sure that I push them out to you so that you all can see them. Okay, so that's Euro USD. Let's have a look at what do we got? GBPUSD. Okay, this is a super interesting scenario. The GBP has lost ground for 9 days in a row. This is a method that I haven't officially shown you. It's based off statistics. Okay. Now, the statistics of getting 9 consecutive negative days or 9 consecutive positive days, it's a super low probability that will happen. Okay, I've seen a paper that somebody did about 3 years ago, and it's something like it happens 4 times out of 10,000 times. So it's something like 0.4% or 0.5%. So whenever I see this, and it doesn't happen very, very often, what I do is I'm going to take a long right now purely on statistics. I do have a second reason. This trade could fail right now in the next half an hour. Okay, but I'm going to place it. I'm going to place it live in one moment. I've got a double bottom to justify a little bit of it, and also I've drawn a fib from A to B, and I'm sitting on the 1618 extension. Okay, so that's good enough. I'm going to take the trade. All right. The major reason that I'm taking this trade is because I've got 9 consecutive days in a row. You look back through as many charts, I'm talking majors, okay? So if you look back through major charts and tell me how many times you see that, okay? It is extremely, extremely rare. All right. So if you look over here, sorry, give me 1 second. I'll just zoom in a bit more. Over here, it nearly happened. You got 1, 2, 3, but this one here is a red one. So then you got to start your sequence again. 1, 2, 3, 4, 5. Okay, so if I go to the current chart, I know it's a method that I've never ever shown you, because if I show you that method, you're going to take 2 trades a year. All right, it doesn't happen very, very often. But look, 1, 2, 3. This was nearly a doji, but it's still negative. 3, 4, sorry, 5, 6, 7, 8, 9. And we're in our 10th candle right now. So what I'm going to do is, give me one moment. I need to drop down a time division to set this up. Okay, I think that there's going to be a big build-up of stops right here. So if this breaks through, it's going to rush and then bounce. All right, so I need to position myself to be able to take advantage of that. So let me just measure out. Give me 1 second. I just want to measure out. I'm going to give myself 50 pips. I'm going to allow it to rush through 50 from where we are right now. Make it 60. Okay, I want to give this trade the room that it needs. All right, so you work out your risk. I'm gonna allow 60 points, 60 pips for me to, just in case I get a rush down and before we turn around. Okay, so here I go. I'm just going to take a 0.1 on this. I'll place my trade. We're at 51.70, so I'm going to 51.10 is my stop, and my stop I'll place in a second. So I'll move it in a moment. Give me 1 second, and here we go. That's it. I'm in. Okay. Now, how to work out the target? Let's work it out. How far should we go, guys? Let's assume. Do we want to go to the 38? I think about here is there good. I'm looking at this there. So I'm thinking here. Who likes about there? What do we think? That would put me at 53.66. Linda's asking, could we place the buy order 30 or so pips lower? Linda, you can, all right, but you may not get triggered in the trade. Okay, so I'm giving the trade breathing room just in case I go lower. Hopefully I don't go lower and it just starts to go up right now. So if you want to put it a limit buy 30 down, by all means, but I just don't know if you're going to get triggered. Okay. All right, so let me move it. Okay, so I've moved the. Now you're going to have to be patient with this. If it starts to turn around, let's say if it does start to turn around and we're sitting over here somewhere come Thursday, you're going to have to make a decision because Thursday is that big day for the GBP, whether you close the trade out or you hang tight for that movement. Okay, So let me just measure out what are we going for? We're going for about 190 pips. Okay, so we're going for about 3 to 1. Is everybody clear on the reasons why I've taken this trade? So I've got 3 reasons to take it. I've got a double bottom. I'm at a fib extension of a 1618 extension, and I've got 9 consecutive negative days, which is extremely, extremely rare. Okay, we all good? Fantastic. All right, that's what I got for you, GBP USD. Let me get rid of that. Let's move on. Gold. Uh-huh. Okay, I can recall the last time I missed last week, but the week before we drew this line and we said if we get anything here, we'll see if we can take a trade out of it. Did anybody take the engulfing trade here? Right there. Did anybody take it? Bijan did. Well done. Okay, nice trade. We called it very early. I think we were over here somewhere. We were over here somewhere, and where we drew this line and we said, let's look for a trade, and that's why I drew this little white line there. Okay, so that one played out for us. What have we got now? Give me one moment. Okay, I don't really have anything right now. Can anybody see anything? Hang on a minute. What about now? Can anybody see anything now? All right, let's get rid of that other line because we don't need it anymore. No, actually, let me leave it. But let me draw this. Okay, this is going to be interesting. I don't trade gold very much. However, to me, this is a valid triangle. We've got 2 touches on each side, and we are just actually, is that a trade right now to there? Let me just zoom in a bit better. Is this an engulfing candle set up to go there? Who thinks yes or no? That I'm on a 4-hour chart, by the way, guys. Okay, the answer is yes. It doesn't have the fractal, however, we're still sitting on this line. Okay, so that's okay. So we don't really need the fractal for that. The only thing that concerns me is, so the way you would trade this is you would have started your trade here. Your stop will probably have to be here. Okay, which makes it a trade. Is there enough room to the top there? Which this one's going to be a 1-to-1 trade. So if you don't like that it's a 1-to-1 trade, then walk away from it. But if you don't mind that, well then there it is for you. Okay? We clear on that one? I'm going to place it. Now just remember gold is a little bit, you have to trade a bit bigger. So if you're not familiar with gold, don't take it. But I'm going to take it. Give me 1 second. I think the smallest I can trade on gold is, yeah, it's 0.1. I just put any numbers in and then I'll just adjust the level. Okay, there we go. All right, so I pretty much got it. Just got to move this one up a little bit more. Okay, is everybody clear on what I've just done? I've taken a engulfing candle setup right there into this direction towards that line over there. Okay, and basically this trade to me is looking like it's a one-to-one trade. So if whenever you take a one-to-one trade, if you're a nervous trader and the trade's hovering around about here or over here and you close it out early, you're kind of defeating the purpose. So if you probably need a trade that's 2-to-1 to make you feel a little bit easier. Okay, but I've just taken it anyway, so there you go. Okay, let me carry on. Let's have a look at yen, US yen. Okay, US yen. All right, this one is probably going to be one that is going to do a little bit of this week. All right, because of the anticipation. The dollar yen is one that tends to anticipate major Fed decisions and then makes its move. So what you may want to try with the US yen is maybe step down a time frame, so like a 4-hour chart, and just see if you can pick off the counter trend strategy that I showed you guys a while back. In fact, actually what I might do is this week I'll show you a counter trend strategy. Just give me one moment. I'm just going to write down something for myself, otherwise I'll forget. Okay, so this Thursday we'll do counter trend. All right. So, and I'll only because I think it's this week may range a little bit. All right. So, in essence, what we're going to try and do is we're going to try and pick out a region where we think it's going to range between, and then essentially every time we get towards these areas here, we're going to try and ping trades back on the inside. Okay, at the moment there's nothing showing on the US yen, so I can't take anything unless I wanted to take something right now, but I've kind of missed it, so don't worry. But this is what we're going to look for, and on Thursday I'll show you this strategy. Again, for the ones that have never seen it, make sure that you turn up and I'll show you how it works, what we look for, and how to pinpoint the trades. Okay. All right, so US yen, I think we're going to trade in this area here, and let's see what happens. Let's move to the euro yen. Okay, what do we have here? Let me just check something, guys. I just think I can see something. Okay, there's kind of like an ABCD pattern. I'll show it to you. It's not set yet, but it's and it's down here. So this is your A, your B, your C, and your D. The way an ABCD pattern works is that your C falls on the 78.6 and your D falls on the 127.2 or whatever it is. Okay, so let me show you how I did that. I grabbed my fib from up there to here, and you can see that I'm kind of not exactly on, but I'm close enough. 78. I am on a daily chart. Okay, so the 78.6, and then if I move and go from here up to there, my 127 falls at around about 131, say 80-ish. Okay, so two ways you can play it. All right, you can straight out put a pending order at that level if you feel comfortable. All right, or You can wait for it to get down there and look for price action to bounce back up. All right, so in an ideal world, what I would like to see is this current candle turn around and become a red candle to down here. Then tomorrow get a candle there, and then the next day trade up. That's what I would like to see. Okay, so that's what I'm going to look for. Let me draw a line on my chart so that I remember. Okay, that's all I got for you on the euro yen. Okay, so we may pick up a trade over there. Any questions on that? Does everybody understand what we're looking for? We're looking for an ABCD pattern. All good? Okay, let's move on. Kiwi dollar. All right, Kiwi dollar is the one that's going to be under the pump. They've got the RBA minutes and rates decision. This is the one that we said would be the most susceptible to news data this week. I look at this chart and, oh, geez, I really don't want to touch it. I kind of got an engulfing candle. Oh, not really. No. Let me have a quick look at a couple of things. Give me one moment. Can everybody see that we're kind of like, we're in no man's land? When you look at charts, okay, because there is no, see, all this area here is empty. So the market has no memory in this area, which basically, so we haven't found support is what I'm trying to say. We've kind of at a 61.8 retracement on a monthly chart, but that's just so long. I don't really like to look at those big time frame charts. So we're in free fall is what I'm trying to say. And but I'm not really willing to go short Kiwi dollar, not anymore, especially since I closed out my Aussie dollar trades. These two tend to correlate quite highly, so I kind of use the Aussie dollar as a guide to what the Kiwi dollar may do. So this week I don't really have anything for our Kiwi dollar. Um, is anybody in a T chaser on Kiwi dollar or anything? Because there would have been some kind of I'm pretty sure there may have been a T chaser. Let me just have a quick look. Okay, now if you got in T chaser Kiwi dollar, the first one entry would have been all the way up here, and you would have got stopped out about there. When you get this type of candle like this, guys, with a big wick like that, which is just all euphoria, you should just pretend that candle never happened, okay? We should ignore this candle. All right, so I wouldn't have expected anybody to enter based off this long wick candle like that. All right, so no, there isn't. I thought we might have still been in some kind of a trade. All right, so we got nothing on Kiwi dollar. We're just going to have to leave it like that, and it doesn't surprise me because it correlates quite well with the Aussie dollar, and we said the same thing about the Aussie dollar. We got no trades there, so that's okay. We're happy with that. All right, let's have a look at the last one for this week, Euro Aussie. The Euro Aussie has been moving like massive movements, you know, on a 5 minute basis and things like that. So if you don't have the stomach for it, stay away from the Euro Aussie at the moment. It is very, very, very volatile. Okay. It is following the path of the dollar yen, that it feels like it's going to do a bit of this until there's a decision being made on the rates. Okay, so what you could do is possibly take an approach, drop down a time frame to a 4 hour, and then see if we can ping off some trades as a counter trend strategy. All right, so but at the moment, I'm going to say Euro Aussie, just leave it alone. It's definitely moving a little bit too much for most of us. Okay. So any questions on anything? I've covered everything. I'll give you a chance to type in your question while I recap what we've done. Aussie dollar, we've finally hit our targets. We've got no positions open. And what we're looking for is looking to see if we can find a bit of ground and then launch our longs, or whether we're going to get some kind of a pullback and then we continue with our shorts. But at the moment, we've got nothing. We're sitting and waiting. Euro USD, we would ideally love a retracement into the 113 area and then sell, or we're going to try and buy off this line down the bottom. Pound US, we're long already. Oh, it looks like our trade's up a little bit as well. How much are we up? We're up 15 pips, and we're up also on our gold trade. Oh, that's nice. Okay, so London's opening right now, so I suspect if we do not get stopped out by 7 p.m. tonight, okay, we could be on a nice trade. So this is a very, very unique phenomenon. Like, to get 9 consecutive days in a row of either direction is extremely, extremely rare. All right, our gold trade, we're taking an engulfing. We've come into the trade a little bit on the late side, but we're in anyway. Okay, and we're basically trying to take a one-to-one trade. Dollar yen, we're going to try and range trade it. Okay, you can use your candlestick strategy, or you can use a fish and strip strategy in the meantime if they're the only ones that you know. The one that I like for this particular one is the counter trend, which I'll show you on Monday. Some of you, sorry, on Thursday. All right, Euro yen. Okay, we're going to wait and see if it comes down to us at the 131.80 mark to complete the ABCD pattern, and we're going to try and take a long. Kiwi dollar, we're doing nothing. Euro Aussie, we are doing nothing also. Any questions on any of what I've shown you today? Or does anybody want me to have a look at anything that I have not covered? And I've still got a few minutes that I can help you with. USCAD is the request. Let's take a look. Here's an interesting one. The CAD this week has got they got their rates decisions. It's been on a huge. This is the USCAD chart right now. It's been up and up and up. If anybody has been doing a T chaser on the CAD, you would be an extremely, extremely happy person. Let me show you. Your entry would have been over here where I've got the crosshairs right now, and you're still in this trade and you're up about 780 pips. Is anybody on this trade by any chance? By any chance? Okay. We've had lots of different entries. Let me just change my profile again. Okay, look, if I look at the US CAD, there was, that we've got kind of inside candles over here, but when without the fractal, we're edging forward. This 135, 134 mark has been a bit of a barrier. Look, if I was in a T chaser from way here, I'm going to sit and wait this out and let it take me to wherever it takes me, because I'm already in a very, very positive trade. Okay. However, if I have to make a decision and I need to enter the market right now, what I can see is a little bit of a converging market. If I step down a time frame, you're going to start to see it a bit better. This is how I would play this. I can kind of see that when starting. Sorry, let me just draw this a bit better. Starting to get this and this. So I would trade this triangle if I was just about to start to trade the US CAD. Okay. Okay. I've some guys are telling me that we got stopped out July 28th. Thanks for that. I didn't miss. I must have missed it. Okay. All right. So that's US CAD. Somebody's asking me about the stop on the GBP USD. I think I said 60 pips. Where have I got it? Give me a second. 51.10. I've got mine at 51.10. Okay. Okay. Any other questions? Anybody else before we call it a day? One of the advantages of being exposed to a variety of strategies is that you pull them out when the market shows itself for it. So this week would encourage all of you to go back and review any ranging strategies that you know, because it's going to be the flavor. We really see it. It just has that feel about it. Now, if we're wrong, we're wrong. It doesn't matter. But we need to see if this is the higher probability type of strategy that's going to work well for us. Okay. All right. If there are no more questions, we'll leave it there, and we'll see you all on Thursday at 3:30. Have a fantastic week. Any questions, just email me as always, and I'll respond to you. Take care, and bye for now.